CDL 1000 is a technology-driven supply chain solution, and that could help get goods to where they need to be in a more efficient and cost-effective way. And with me is Doug Anderson, an advisor to the company, and also Andrew Sobko, the CEO. Welcome, both of you. And Andrew, let's just start and give me an overview of CDL 1000.
Sure. So CDL 1000 is a logistics technology firm. So we initially started with kind of trying to digitalize the whole kind of space. And our key mission was we were focusing on the business called drayage, which stands for moving containers out of the ports.
Okay.
And over time, we expanded into different service offerings like truckload business. But in a simple way, we build a brand where we kind of like sell shipments in bulk, and we call it batches. And our kind of batch platform stands for, we sell, let's say, from 50 loads at the time as one transaction, or 100 shipments at the time as one transaction.
Yeah.
That's a high-level overview.
So this has clearly been an issue in the news, the supply chain issues. This is what you're trying to fix, right? Yeah. Okay. And how does it work?
So everything you heard in the news, about the supply chain, it all starts with ports. Mm-hmm. And that's exactly what we do. So CDL 1000 is currently offering, we manage imports out of the ports for the biggest worldwide companies, the biggest retailer companies in the world. And most of our clients are Fortune 100, and now we expanded to Fortune 500 list. Mm-hmm. But yeah, the whole COVID bubble starts with moving containers, shortage of chassis, and we were able to execute on a high volume projects with the biggest customers.
Yeah, Doug, this is an area that seems to me is clearly in need of disruption.
Well,
do you agree?
Yeah, I mean, the timing of this particular deal, of course, is brilliant because we've all experienced what's happening with supply chain these days. And sometimes the most dynamic, the fastest growing companies, I mean, they're number 3 on the Inc. 5000 list, and they're the fastest growing number 1 in shipping and ports. Sometimes the simplest solutions are simple. And so what they've done is they've cut out the middleman so that the ports and shipping are more efficient and more cost effective. Mm-hmm. And consumers, especially shipping companies or companies that need things shipped, are responding to that big time. Mm-hmm. Because they're realizing, hey, these guys are faster, more efficient, cheaper than anybody else, and so they're flooding into there right now. I think they're on track to probably take about 10% of the shipping market in the U.S., which is very substantial.
Yeah.
And they're an amazing company.
Yeah. Can you explain a little bit, Andrew? I mean, how big of a market is this that you have now, and could it be?
Sure. So overall, like logistics industry, it's about $1 trillion industry in the United States and $9 trillion worldwide. So our goal in the next 3 years to capture 10% market share, specifically with the drayage, like containers out of the ports for import and export containers. So we believe if we solve the biggest supply chain crisis, the biggest supply chain problems, anything else will follow. Mm-hmm. And the best way to kind of understand this, so here's the ports, here's the consumer. So we pass it on consumer on average 20% savings. And we basically pulling the cost out of all this complexity and all of the shipping. Mm-hmm. And the best example is like a fintech, in the fintech world, what they did to the banks. Okay. And we call it like, kind of financial arbitrage industry. So we deliver in the same model into logistics space.
Can you explain a little bit more your model? I mean, what's the system behind it? How does it work? And is your customer like a retailer or? Okay, explain all that.
So our customers are Fortune 100 companies. Uh-huh. I'm not going to mention names, but they're some of the largest retailers, chemical companies, manufacturing companies. We're big in the defense field. Let's say some of the largest prime contractors for Department of Defense are our clients. Okay. So we do a lot of work for Department of Defense. Uh-huh. And so the whole business model is, we've been hired by those companies and we execute. Mm-hmm. And we leveraging our drayage expertise, and then, we're pulling containers out of the ports, and then we deliver into the final destination to the warehouses inland all over the country. Mm-hmm.
Now, we just got a railroad strike perhaps settled. I mean, I know the union still has to vote on it. Does that play into your business model at all?
Yeah, so railroad strike is not resolved yet. Fortunately, just been delayed, potentially probably from after the election. So we see on our end, we're in the business of helping clients kind of avoid railroads, and we built the whole business where we actually putting containers on open deck flatbed trailers, and we helping some of the biggest well-known clients avoid railroads. And let's say containers getting pulled out of the ports, we put it on the flatbed trailers and we transport it all over the country. So we built a big business on that. So we always have a solution for our clients.
Yeah. Now, Doug, in terms of an advisory role, I mean, this is also a time management company. Is really what it's all about, cost effectiveness and efficiency.
Exactly. And not to mention their growth has been remarkable. I mean, this is a young company, but he's been able to attract Fortune 500 companies, as he mentioned. Their revenue is strong, growing, significant. And so this is the kind of company that an investor at an early stage, looks for. It's a dream company because they're literally the hockey stick model.
Andrew, how could an investor find out more about it? Is it, do you have shares that you purchased in private placement or anything like that?
So we're a private company, and as of today, we don't have any outside capital.
Okay.
Of course, we do have tremendous inbound interest in the company, so we're trying to actually decide and potentially partner up with the right strategic partner. But at this moment, we don't have any outside capital in the company.
Okay. And then just finally, explain your goals. Where do you plan to go from here?
So our overall goal kind of to simplify this kind of and disrupt the whole supply chain industry. And we started with drayage, which is the biggest the most complicated piece of it, supply chain. And what we're working on with fully digitalizing the space. We started with full transparency. We have full transparent pricing where, let's say, clients can book hundreds of trucks digitally in seconds through the website and then deliver full transparency real-time tracking platform. We're big in using full AI and quantum computing for pricing. That's tremendously helpful to our firm, and our employees. So our goal is to capture 10% market share in drayage in the next 3 years and continue expanding our batch platform where we sell shipments to mid-size and larger trucking companies in bulk. We call it in batch. It's called batches.
Andrew, explain drayage. What is that exactly?
So the whole logjam in the ports that you heard in the news for the past 3 years, it starts with drayage. And drayage means moving containers out of the ports and rail yards. And there's massive kind of shortage of chassis, drivers, so it all kind of plays into it. So we were able to build successful infrastructure out of the biggest ports and rail yards in the country. So we're able to execute successfully to pull those containers out of the ports. We also successfully saved it's called demurrage, which is late fees to the ports. We saved most of our clients at least 20 to 40% on demurrage fees, which we're talking about tens of millions of dollars spent on a monthly basis by the biggest Fortune 500 companies.
Wow, and in an inflationary environment, that is really important.
Absolutely.
Doug, go ahead.
And it's usually being passed on to consumers.
Right.
So that's how we're saving money for the consumers at the end of the day.
And Doug, explain a little bit of the growth expansion strategies that you're seeing.
So, as mentioned, I mean, there's cost savings to the customer and consumer. It's not nudging the needle. It's really moving the needle. I mean, no one's seen this kind of cost savings in this sector. This massive number in forever, and so with that. They have the advantage in growth of not only organic, numbers, but also they have the strength to do acquisitions, which they're very active in. They're acquiring other companies that don't benefit from their software that can see that kind of growth, and so they're joining the train. And so this company is very dynamic. It's growing fast, and it's attracting a lot of interest from investors and from strategics as well.
Okay, thank you so much.
Thank you.